We caught up with Jon Najarian after the halftime report. John, Mark Cuban said he's got the biggest hedge of his life on into the election because of the Trump upset risk. What do you think of that?
Well, I always follow the money, John. So rather than a poll that's, somebody's opinion for some lonely person that the pollster calls, no offense, but that is what a poll is after all. I'm much more favor somebody putting their hard-earned cash down for a trade. So the fact that Mark Cuban, a huge backer of Hillary Clinton, sees a real risk to this, sees that Mr. Trump may be overtaking her, according to some polls he has, I think that's pretty significant. So I think Cuban being scared is probably logical.
A guy like Cuban, what do you think his hedge is?
I would bet, John, because when he hedged his Yahoo, he did it the right way. He sold upside calls and he bought puts. That's what's known as a collar. He did that for his Yahoo stock when he sold broadcast.com, and I bet he's got something similar on. You would do that, for instance, if you owned a bunch of S&P 500 related stocks. You would sell S&P 500 calls above the market, and that would pay for the puts that you're buying, the insurance, below the market. That's what I bet Mark did.
Great, John. And one last question. What's your favorite hedge going into the election now that the risk seems to be increasing that Trump could pull an upset?
What I wouldn't do, John, is I wouldn't do a double levered or triple levered ETF, because I think that's dangerous for most investors all the time. But what I would do is I would buy a VIX call spread. On any dips in volatility, I would buy, for instance, the 18 calls and sell the 22s or the 24 calls. That's a vertical spread. I can make a lot of money really fast if indeed the election is thrown up as to who is really the winner, and or if Mr. Trump just sweeps in. I think that trade pays off, bang, like that on the 9th and 10th of November.
Thanks, John, very much.
Thanks, Johnny.